Good evening. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for correction time. You heard me. We're in a pullbacks. That is the right term to be using in a number of the stock indices for this Friday, the 19th of April, 2024. So just think about it. Last Saturday, we saw the drones and the missiles coming in on Israel. Today, last night, actually, Thursday night, if you're at a phone, if you get alerts, I'm getting mine. I'm going, what the heck's going on here? Look at the markets. They're falling out of bed. And obviously, Israel had attacked Iran. So the tit for tat took place, and they both did this surgically. I mean, come on. You were watching the drones like I was when they were hitting Israel last week, and they had lights on them. I mean, could you say any further? Here's where I'm at. Come shoot me down. And what Israel did is they weren't that way, but where they placed whatever they fired, we're still trying to find out just exactly where it came from. I'm not clear as to that. But they put it near the nuclear center to say, we can hit your nuclear area, but we didn't, nor did we hit a military air base, nor did we try to kill anybody. And everything seems to be dying down. So it's probably going to go back to the proxy fight. I'll stick with what I talked about. I seriously doubt that there'll be an invasion of Rafah over Passover, but after that, everything's fair game. We see that in the House of Representatives tomorrow, with any luck, there'll be a vote to give Ukraine sorely needed money, Israel, Taiwan, and then a fourth bill that's all about the other goodies, TikTok and things of that nature, more sanctions, China, blah, blah, blah. But four separate bills that'll be stitched together in another bill that'll go to the Senate, and as long as there aren't funny amendments attached to it, it's probably going to get passed right away, and we cross another hurdle that we're done. Could this fail? It could. Could House Speaker Johnson be called up for a vote and be tossed? He could. I mean, the ultra-right are they're infuriated because nothing here has helped the U.S. border, and that's what they were fighting for, and they have nothing. Now the leverage, where's the leverage on that? And I get what they're saying. That's very important. So I see both sides of the story, and I'll let you decide which side you're on for that. But that is what's going on. So you walked in, and if you saw last night like I did, your jaw went, uh-oh, because you saw the Dow had gone down some 500 points. Crude oil was up $4 a barrel. Gold didn't roar, nor did the silver market, nor did the currency markets, except one. The Swiss franc out of nowhere rallies over 100 points. It gave just about everything back by the end of the day. But interesting what it did, and none of those markets held the big gains. So now we've had the impact of the war. You got to see it. That's gone. I don't think that Israel and Iran are going neck on neck against each other for a very long time at this point. I think whatever's going to happen in the Mideast will happen through the proxies in Israel. That's my guess. When you look at eBay, eBay, we haven't looked at eBay. Distribution on a weekly chart and starting to break down. Okay. The pattern is a higher high and lower low. So you've stepped out of a long-established uptrend that began right here, way back at the beginning of the year with higher lows, then higher highs, and now that has stalled out on the chart. Where did it stall out? I want you to look at the 200-week moving average of closes. So often I try to point out what key moving averages are. I believe there are four big ones. I think it's the 18-week, I think it's the 50-week, the 100-week, which here is in green, and then the 200-week. Traders use those averages all over. Now, is it the 18 they use? They'll vary it. Some use the 20, some use the 21. It's all preference. But the rest are very well established, and there's many reasons for them. So you ran into your buzzsaw there temporarily. So you have a correction where you're down for the week now, 1.79%. Last week, if we take a look, you were down 1.44%. So off the peak, you're down about 3%. That's the way to look at where the market's at. You have this in many of the different areas. Very few are down 10%. Once you get 10%, traders like to call that, now we have a market that is into a full correction, not a pullback, a full correction. They're very careful with their wording. In JP Morgan, look what you've fallen back to. You had lost your bullish embedded reading. I use this all the time. And often, I can't say all the time, really often, momentum will turn before price. And when this happened, until you got over that high, it's saying wherever the 18-day average is, and I teach this in my charting course, the market should make its return to that 18. Just what the market did, and it's still in a bullish mode. Still higher lows, higher highs, but it needs to work off an overbought condition. When you're embedded, you go from embedded typically to overbought if it's a bullish embedded, and then you get away from that, you either re-embed or you get both numbers back under a 70 level. That's how it typically works. In Microsoft, here we are in Microsoft, and the market started giving a problem right here. Now, the pattern, if you were long, you were doing all the right things on the chart. Higher lows, higher highs, stochastics embedded. Now, let's talk together here. Right here, April 12th, the market starts to let go, and this is where you're at right now, okay, on the 19th. Right back to that 18-day average, and a big size break that is occurring, not in dramatic, 5.4% this week. If you go back, let's see if I can get this back. Yeah, I'm going to come, I'm hitting the wrong button. Here we go. And this week, right here, you were down 0.85. You can't count the week before it, okay? Nothing wrong with that. All right, so you're getting a 5%. You're not down 10%. To do that, you have to get back down probably into the 370 area, something like that. Then you'll say you're in a correction territory. They're going to report, I believe, Microsoft this coming week, so that'll be an important number for it. In KRE, which deals with a lot of commercial real estate, this is where the short covering's coming in. Now, understand what I think. Higher for longer in interest rates, kiss of death for the properties that we're hanging on and trying to hang on. Office real estate has a real change. The pandemic in America changed how workers work in many large cities, and they don't want to go back to the office, period. They want to work remotely. So you don't need as much office. Some of these buildings can't come back. Some of the B and C grade buildings, big problems. The A buildings, the new ones with a lot of amenities, well, they'll probably attract the companies that demand workers that you have to work out of the office a certain amount of time during the week. But I think in America, we've seen a shift. Maybe you work 3 days in the office, 2 days out, 2 days in, 3 days out, something. Those are the things going on, and that means smaller space. Remember that. So the days of needing space. I'm not saying there aren't some companies that do. That's not what I'm saying. But overall, no. That is what I'm saying. So you look at it, you can see the pullback that is coming in the market in both of these. MCHI, you've pulled back to the 18-day average. The market is overbought. This is China, but you need to get underneath 39.19, probably 38.19 in order to get really bearish on this market. We'll see if it can do that. In XLI, well, for the first time, you've broken through a prior high, so a prior low. This is the pattern that just happened. All of these higher lows, higher high patterns as a groupings were broken. So a pullback, a correction, whatever it's going to turn into, is underway right now. And what caused it? Not Israel and Iran. It's that the Fed isn't moving in the way that the market thought, and it has to keep recalibrating. Remember, this market's full of naysayers. No matter what they hear, no, you're all wrong. The Fed's going to cut. We still have some firms that are determined that it's June. If they win, they're the guys you'll hear all about. You stuck to your cards. I don't think they're right. I think they're wrong. I'm not even convinced July's on the table the way that some people do. We need to get a pattern where these numbers start coming down, and I think it's going to take 3 in a row to do it, or 2 in a row, a bounce and then a third back down to get the Fed to do something. Why? 3 is a good number to take averages off of. That's the real reason why. Higher lows, higher highs, still embedded. So this is a pullback in a market that is still bullish, not bullish. In the dollar, you're up to a key resistance area here, a little dangerous to buy. It's also the first move over the 100-day average. I'm not bearish. I think the dollar stands alone in strength because I think we will be the last central bank standing that's still holding rates as the others start moving in the June-July period. Let's see if I'm right or wrong on that. In the gold market, you went into a pause, but I'm a little concerned. Here we are with Israel attacking back at Iran, and the market doesn't make a new high today. We might be at the point where the market needs to consolidate the gains or break back a little bit. Be careful. You are embedded, which tells me when the market breaks under the 18-day average, if that stays in place, there'll be willing buyers, but I don't think they'll buy over the Bollinger Band. Same in the silver market. No, silver's overbought and over the band. I don't think you're getting people to chase it, but the same idea. These markets, silver and gold, didn't run off the attack by Israel on the market. Crude oil did. The Swiss franc did. The stock market went down dramatically last night. So there's things there. Eli Lilly, for the first time, lost its bullish embedded reading. It's probably headed to the 18-day average to regroup, in my opinion. Uber, first big correction. So there's a theme we have. The theme is, since the beginning of the year, since the October-November period, you had gotten up and then you began that period of higher lows, higher highs. That's rolled over. That part of the game is over. So this is a pullback, a correction. It's a correction if you get 10% breaks from the high. It's a pullback if you don't, but you drop. That's my terminology. Cameo, which is uranium. Well, it came out of its downtrend, went to the upper band and ran into trouble. But this is good news. And, you're going to see uranium usage pick up. These mini nuclear plants are going to be a wave of the future again. I know people look at me like I'm crazy when I say it, and I go, I don't think you understand. This, under the new plants, can be done in certain areas, and they'll do them. If you want to get away from fossil fuel, it's another choice. Meta, higher high, lower low. I think you're going to lose the embedded reading when we reopen on Monday. So keep your eye on that. If so, you're probably headed to the 451 area. Now I discuss this and a heck of a lot more in the mornings. Let's see if I can get this to come up for us. There we are. In my morning videos at 9 o'clock a.m. Central Time, Monday through Thursday, I record a video and I cover 40 different markets, and I rotate the markets I'm covering. You just saw how you got in here eBay, so I'll do that at times on the different ETFs and the likes that I'm covering. And my subscribers can write me and ask me questions. I will answer them. This is some of the markets, but I always rotate. But it's all the groupings that I do, and I build from there for the other things for you. And the whole idea here is to look at daily charts and weekly, and then on the weekend to look at the weekly charts. Is there something there that makes a lot of sense on those same 40? And try to come up with trade ideas that might make sense, some for the longer term, some for more of the shorter term. I'm not a day trader. Shorter term can be a month, it can be a week, until the trade goes bad. And there are other trades you'll be in like we are still since December. So if you'd like to try this, just go to our website, iraepstein.com, go under the word research, move your cursor to the top here, give a click to the word research, and away you go. I'm Ira. I'll catch up with you all Monday morning. You take care.